A 48-year market veteran is warning about an imminent 80% stock market crash, and he's stressing that investors should prepare for more wealth destruction than we've ever seen. In fact, he isn't alone. According to a recent survey, more than half of all big Wall Street investors are bracing for a significant crash in the coming weeks and months. This is the type of news you won't see on the mainstream media, which wants us to believe we're marching towards a prosperous future, when in reality, we're headed to what may be the greatest financial meltdown in modern history. Most people are still in denial that a stock market bubble even exists. The bubble is not only here, but already set for a brutal burst, an event some argue that will rival the 1929 Wall Street crash. For that reason, today, we have decided to expose the truth to you. And it is ugly. We are going to echo the voices of market insiders who've been trying to alert us about the dangers lying ahead. At this moment, investors have never been so nervous. Stocks are up almost 90% from last year's lows, an extraordinary record accomplished in less than 12 months, in the middle of a recession and a historic slowdown in economic output. No wonder why so many measures are suggesting that the market is extremely overvalued. The current bull run isn't supported by real economic growth, but by speculation. Soaring inflation is threatening to reverse the slight economic rebound we experienced earlier this year and plunge the U.S. right back into recession. That is why the Fed is panicking, and it's decided to anticipate its tapering plans and start reducing bond purchases before the economy slumps. However, by attempting to avert an economic catastrophe, they may end up creating a financial disaster. Many other factors are also at play, including the worsening of the health crisis and the collapse of China's biggest real estate firm, Evergrande, which has triggered major shock waves throughout the global financial system as the company began to default its gigantic debt, leaving lenders infuriated. The list goes on and on. That's why many of the top strategists on Wall Street have recently said that a stock market crash is coming soon. Now, if we look at the latest numbers, we'll see that stocks' performance is reflecting this cautious outlook. The S&P 500 dropped by about 4.5% since its September the 2nd peak of 4,536. The decline has sparked questions about whether the market is close to its peak or if it has already peaked. According to the chief macro strategist at Contrarian Macro Advisors, David Hunter, the timidness on Wall Street and among investors right now signals that stocks are about to top out in this bull market. He says, everybody on Wall Street and an awful lot of people on Main Street are focused on markets at a top or markets past the top or just about to the top, Hunter said during a September 27th episode of the Coin Stories podcast. And I think when you get that kind of mentality or that kind of a narrative out there, you're probably not there, he added, highlighting that a herd of retail investors is choosing to ignore the risks, thinking that this bubble will be sustained forever. Hunter is a 48-year market veteran who knows how cycles work and when threats are emerging. He says that the S&P 500 will go to 5,000 before crashing down, and everything will start to fall apart when the Federal Reserve begins to cut back its balance sheet and taper its asset purchases. The market insider reiterated his call for a steep pullback in stocks, the S&P 500 to drop as much as 80% from its peak, he warns. We're going to see more wealth destruction than we've ever seen. Hunter stressed. The veteran also alerted that this brutal stock market crash is likely to come around the fourth quarter as inflation will rise beyond the Fed's expectations, and it will cause the central bank to taper more aggressively and more quickly than investors have anticipated. Right now, the official Fed plan is to start tapering toward the end of the year, reducing its balance sheet by $15 billion a month from $120 billion a month. Hunter's prediction of an 80% crash in stocks means that we are on the verge of one of the largest drops in history. Now, a correction that large has happened only once in history. That's right, during the Great Depression years. In the 2008 crisis, the S&P 500 went down 57% from its peak, and during last year's crash, it dropped by 34%. Now today, the bubble has exceeded every conceivable level in pretty much every corner of the market. It is hardly surprising at this point that most big bulls on Wall Street are starting to experience a bearish sentiment. Many of them have started selling off their riskiest assets and turning to the exits before the carnage begins. Even big banks such as Morgan Stanley have been recently warning their clients about an impending correction and urging them to back off and reposition. It's true that stocks are in an unprecedented situation. The Fed's balance sheet is the largest it's been since it launched quantitative easing policies at the onset of the global financial crisis. This, in addition to its zero interest rate policy, has propped up valuations at historically high levels. But it is all artificial, and taking this liquidity away could very well trigger a downturn, as Hunter described. Do you want to know who else agrees with Hunter's forecast? No one less than legendary investor Jeremy Grantham. Grantham is joining a long list of market insiders who've been trying to caution investors that this frenzy will not last for much longer. He is a widely respected market analyst who has a track record of spotting stock market bubbles as they develop. And earlier this year, he pointed out that the U.S. stock market was in the greatest financial bubble in history. Now, this has been crazier by a substantial margin than 1929 and 2000, in my opinion, he said, referring to the dot-com bubble collapse, of course. Now, the investor also agreed that the S&P is set to face a collapse in the coming months. He noted that the popularity of so-called meme stocks, special purchase acquisition vehicles, and cryptocurrencies are signs that financial markets are extremely confident and therefore due for a fall. Grantham outlined that the vampire-like stock market may keep fueling the rally and ignoring the bad news around it. But that doesn't mean a meltdown won't follow. The market is so into optimism that even as the data turns around it, as it is today, the market shrugs it off, he said. So, interest rates are beginning to go up. Shrug. Huh? So the Fed is beginning to talk about pulling back on its purchasing of bonds. Huh? Shrug. Last Tuesday, U.S. stocks fell the most since May, with technology shares particularly hard hit, as some of the issues mentioned by Hunter and Grantham have started to worry big Wall Street figures. In fact, according to a survey released by Insurer Allianz, most U.S. top investors now foresee stocks heading toward a crash as they fear resurgent virus cases will throw the economy back into recession. Over 1,000 investors in the market's top tier were interviewed. The survey found that a 54% majority say they are worried that a big market crash is on the horizon. That rate is the highest of 2021, largely surpassing the 45% of respondents in the previous quarter. Nearly 70% revealed that they believe inflation will hurt Americans' purchasing power in the next 6 months. Inflationary pressures are only growing worse in recent weeks, with the Core Personal Consumption Expenditures Index, a key inflation measure watched by the Federal Reserve, rising to 3.6% last month, the highest rate since May 1991. You know, the outlook is getting so bleak that one investor decided to launch a series of full-page advertisements to warn people about the risks of an imminent bubble burst caused by excess liquidity. Atsuto Sawakami, a veteran Japanese investor and a legendary figure in global equity markets, argues that people should brace for the worst-case scenario and start acting as soon as possible. The collapse of the bubble is just a matter of time, one of the adverts said, which carried Sawakami's name and that of the firm he founded, Sawakami Asset Management Inc. The time to act is now. Get as far away as possible from this growing epic bubble. Another ad cautioned about the long-term impact of zero interest rates and monetary easing, explaining that low-cost financing made businesses slack off and reduced investors' risk awareness. His warning suggested that investors should reposition their asset portfolios to reduce the damage they face. The tension is intensifying across financial markets, given that October is known as the most volatile month for stocks. Stocks suffered their two worst crashes in United States market history in the month of October. And with only 7 trade days in, it already looks like we will have another rough fall. Few investors still remember the trauma of 1987's Black Monday. Many prefer to reassure themselves that a similar crash could not happen nowadays, given market reforms that were instituted in the wake of the sell-off. But they're only kidding themselves, said Xavier Gabbay, a professor of economics and finance at Harvard, who conducted a study that has emphasized the growing chance that the stock market will experience a one-day crash as bad as 1987's Black Monday by the end of this month. Gabbay's study derived a formula that predicts the frequency over long periods of time of large daily swings in the market. After testing the formula against hundreds of years of stock market returns in both the United States and around the world, he and his co-authors found the formula to be impressively accurate. And perhaps more worryingly, they found that we're right on track for another big-time market collapse. In essence, over-bullish sentiment, economic weakness, excessive debt levels, and reckless monetary policies are key ingredients for a disastrous recipe. Today's stock market is facing dangers much bigger than during previous bubbles. If these expert predictions turn out to be even half correct, this means that we will be facing a financial apocalypse earlier than most people dare to imagine. Thank you for watching. Please, we look forward to reading your comments under this video.